Needless to say, the China-US trade war is affecting the economies of both countries. But despite US President Donald Trump's deeply erroneous claims about the impact on China, to what degree has the Chinese economy actually been affected? Meanwhile, as the world's two largest economies tango over trade, an American author predicts that the future is Asian. Why does he say that? Welcome to The Point, an opinion show coming to you live from Beijing. I'm Xiang. How much has China lost in the trade war with America so far? On Monday, US President Donald Trump offered up an answer of his own, 15 to 20 trillion US dollars. It was a wildly inaccurate number, even by the standards of a leader renowned for his inaccuracies, as it exceeds China's total GDP. That's not all. President Trump also called China a currency manipulator, though his own Treasury Secretary hasn't done that. And he claimed that China has been, quote, decimated by companies now leaving the country. Yet, despite Trump's claims, China has indeed been harmed by the trade tariffs, just as the American side has been. Last week, the governor of the Chinese People's Bank of China, Xiang, publicly acknowledged the current weakness of the Chinese renminbi, which he attributed to the trade war. So what's the real picture here? How has the trade war affected the Chinese economy as well as the American? Joining me for the discussion here in the Beijing studio is Professor Xiang, an expert in American studies at the Chinese Academy of Social Sciences, and from Boston, Professor Ravi Ramamurti, director of the Center for Emerging Markets at Northeastern University. Gentlemen, welcome to The Point. So as I said in his latest interview, President Trump said that China has lost 15 to 20 trillion US dollars in value since the day he was elected. But the actual size of the Chinese economy is estimated to be around 13 trillion US dollars. So it's impossible to us for someone to lose more than one's own worth. Professor Liu, how do you look at that? Was that a joke? Was that an exaggeration, or was it truth?
Yeah, I just like to say Mr. Trump is not a man for numbers. He has no sense of a real number. If you follow his speeches, you will always hear him saying just millions and millions, billions and billions. Now it's trillions and trillions. So actually, Mr. Trump is living in a kind of fantasy, and he's a man who want to prove that fantasy is power, and bluffing is power, and talking nonsense is power. And actually, in this case, I'd say he's a nonsense person.
However, how much has the Chinese economy been affected by the trade war so far? And for instance, let's just take a look at the kind of value that might have been lost because of the trade war. Is there a Chinese estimation of that number, Professor Liu?
If we say about the impacts about the trade war, ongoing trade war, I'd say there are some aspects. Firstly, it's about China's economic growth. So, you know, our Premier Li Keqiang said very clearly our target earlier this year, that our target growth growth rate of this year is 6 to 6.5%. That means 6% is the bottom line of our expected growth. So in this way, I believe in the worst case scenario, our growth rate will be 6% of this in this year.
So it could shave half a percentage of the Chinese economy, which is half a percentage out of 13 trillion US dollar. Okay, we'll leave our guests to do the calculation from here. Professor Ramamurti, how do you look at the kind of exaggeration, let's say, that President Trump has put on the damage that China has suffered so far since he was elected? What is your estimation of the kind of damage that the Chinese economy has sustained so far?
Well, I think the president's numbers are clearly way off the any reasonable guesstimate. But he's, as your guest alluded, he's not known to be accurate on facts. So I don't think one should delve much deeper into those numbers. The exact loss, I think, is very hard to quantify. We had a symposium at my university last week looking at the impact of the war on trade war on strategies of companies, and what I gathered from that is that a few companies are moving some of their production out of China, especially labor-intensive assembly work.
Mm-hmm.
And I think they're probably holding back on making additional investments in those areas. But the flip side of the argument was that for many parts of the value chain, China is still an incredibly competitive place in which to carry out those activities, and companies are hesitant to move those activities. So even if the final assembly moves, a lot of the inputs required for the final assembly will continue to stay in China. So I think the impact will be not as great as is feared. I think it's more on the technology dimension and potentially the future integration of the two economies, which would have been to the benefit of both economies, which we may be losing. So I think the long-run impact is much harder to assess and probably much more serious than the short-run impacts.
You talked about the kind of relocation of businesses. Let's just take a look at what President Trump said again. He said China is getting absolutely decimated by companies that are leaving China, going to other countries, including our own. Well, the American Chambers of Commerce in China had a recent survey where they got 250 responses from their members in China, and it turned out that actually 60% of respondents had no plan to relocate outside of China, and if they ever do relocate, the great majority of them think about going to Southeast Asia or Mexico. Only 6% are thinking about relocating back to the United States. So, Professor Liu, again, what kind of sentiment does that reflect on the American businesses operating here in China? How much have they been hurt, although they have not been although China has not been decimated?
Okay, actually in the past years we already saw some factories, especially the labor-intensive factories, moving from China to some countries with lower labor costs, like Vietnam, Cambodia. But that doesn't have a real impact on China's economy because of the quality of our economy is improving. And currently, because of the trade war, there might be a little more factories who has a shorter supply chain would like to move. But consider a factory with a very long supply chain, like General Motors, GM in China. The total number of autos produced and sold for GM is 8 million cars. It's 8 million a year. And among this 8 million, 4 million are produced and sold. Half in Shanghai and some other places in China. So could you imagine that GM moved all these factories from China? How can GM to sell 4 million cars produced in another country? So it's impossible to imagine.
Speaking of which, it's really quite, it's true that according to the same survey, American businesses, 3/4 of them say that they have been negatively impacted by the tariff and by the trade war. Professor Ramamurti, it seems that American businesses in China are the target of these kind of measures, and they are definitely caught in the crossfire. Whose loss is this? Is it China's loss? Is it America's loss? Or should we look at it from some other way?
It's probably China's loss to some degree, to the extent they actually move some activities out of China. But it's not necessarily America's gain. It's because one must distinguish between companies and countries. Companies are actually much more capable of surviving these kinds of disputes than countries are, because what a company can do is shift around where it makes stuff. So instead of buying from China and sending to the US, they can buy from China and send it to some other factory somewhere else, or they can change their sourcing patterns. And this is what we learned from the companies at our conference. They are in fact adjusting their sourcing patterns, but it doesn't mean that they are moving all of it to the US. And so at the end of the day, I think what this does is hurt the economic prospects for people in the two countries, and not necessarily for the companies. The companies may, in fact, be able to survive quite well.
In terms of jobs, let's talk about the people. In terms of jobs, Professor Liu, there are no mass layoffs we're seeing, right? Are we expecting any of this happening if the trade war further escalates? For instance, if President Trump puts additional tariffs on 300 billion Chinese imports to the United States, Chinese exports to the United States?
Yes, it's a serious question. Actually, I talked to this with some government officials about that, and the government is prepared for certain industries in certain areas which are depending on exports to the United States market. So I could anticipate that with escalation of the trade war, some factories in certain areas would be affected, and there would be a certain number of people losing their job. But the government is already prepared for that, so we will give them certain more trainings and help them transfer to other plants and factories.
Yeah.
So it's not a big question, but it's serious.
Professor Ramamurti, how about the U.S. side? I mean, we got the numbers for the latest employment, and it's shown from U.S. Labor Department numbers that non-farm payrolls for May increased just 75,000, where economists expected a gain of 180,000. It's really much lower than the kind of employment created or expected to have been created. Is that kind of gloomy picture anyway associated with the trade war?
Well, firstly, 1 month's numbers, one shouldn't make too much of it. We've had this in the past where a particular month came very unexpectedly low, and the following month the numbers came up significantly higher. But if you look at more of a longer term trend over the last 6 months.
This was the second in 4 months that payroll increased by less than 100,000. So.
Well, they also adjusted downwards the numbers they had estimated for the previous 2 months. So that is evidence that the U.S. economy job growth is slowing, and the reasons for that, I think, are multiple. I think one of the key factors, of course, is the stimulus from the tax cut that happened early in the first half of President Trump's term. That effect is starting to wear out, and so investment and expansion and job creation is slowing down for that reason. But I think the uncertainty created by the trade war cannot help, probably makes companies more reluctant to make large investments. Many of them seem to be taking a wait-and-see attitude to see how things pan out before they make further investments. And I think one of the factors that President Trump may be overlooking is that when you take protectionist measures, you not only reduce your imports, you also potentially reduce your exports in 2 ways. One, because you make your companies less competitive in the export markets. And the other is if world growth slows down, then it becomes even harder.
Sure. We have to leave it there. Many thanks to my 2 guests, Liu Xiang at the Chinese Academy of Social Sciences and Professor Ravi Ramamurti at Northeastern University in the United States. You're watching The Point. Coming up after a short break, from the Europeanization of the 19th century to the Americanization of the 20th, will we see the Asianization of the 21st century? Stay with me.